Welcome back. The next management on the channel is Dodla Dairy. It reported a strong set of Q1 numbers, margins expanded, value-added products saw growth of more than 21%. Going forward, the company is targeting a capacity of 20 lakh litres per day. We have Sunil Reddy, the managing director at the company, who joins us now. Good afternoon, sir. Thank you so much for joining us. The first question has to be the target that you've set, 20 lakh litres per day. When can we expect you to go ahead and reach this particular target?
We are anticipating to reach 20 lakh litres per day in the next couple of years. And thank you very much for giving me the opportunity for being on your channel.
Okay, all right. Mr. Dodla, good to have you on the show with us. It's a good set. We have seen this for you. We have seen this for the peers as well. Wanted to understand what have the procurement prices in Q2 been so far, because this has been consistently increasing. How is it for you? How is it for the industry? And what is the outlook? Will it continue to increase?
Procurement prices will remain muted in the current quarter because the earlier monsoons in the south of India has got the flush season coming in a bit early, and there is plenty of milk in the system at the moment. So we are looking at prices remaining steady state, at least for the second quarter.
So it'll be around that 39.4 rupees per litre?
Yes, around the same prices.
Okay. Let's now come to the value-added product segment. Number one, what is the growth that you're targeting in this particular segment, and what will it be as a percentage of your top line going forward?
The first quarter, we have achieved almost a 34% contribution from the value-added segment at a consolidated level. This has predominantly been done with the earlier statement that we are making of increasing our procurement. We are now trying to become more active in getting more procurement for ourselves in terms of having fresh milk available throughout the year for our liquid milk sales, because we're doing a bit of branding and marketing exercises and we want to keep it that way. As a consequence of that, we will also have a lot more of fat and powder to sell. So fat being sold in the form of consumer ghee and powder being sold as a form of B2B, this will drive our growth in terms of the value-added segment to be larger than it was in the earlier days. So we are looking at the 30 to 35% range of growing in this year.
Okay, so 35% of total sales is what you're expecting. Is that correct?
Yes. Between the 30 to 30.
What is the growth that you're expecting in this particular segment? You had indicated you're looking at mid-teens growth for value-added products. Will it be led by pricing? Will it be led by the newer products that you're introducing? So that would mean better volume growth here?
Yes, it will be also led by the newer products that we're introducing as the larger share of the fat produce that we are selling. And that's the reason we'll see the expansion coming in more of the value-added component.
Okay. Now, talking about the geographical mix that you have, you're largely present and a majority of your sales comes in from South, both Andhra Pradesh as well as Karnataka. So going forward, how do you see that revenue mix change?
That will maintain status quo. We're also pushing harder in terms of Telangana now, because Hyderabad being one of the markets that we're pushing for. And we've also been doing well in Tamil Nadu now, because our spread in Tamil Nadu is increasing after our acquisitions a couple of years ago that we did with a couple of dairies there. So we think we'll maintain our market shares in the existing markets, and also Tamil Nadu and Telangana will try to expand our market share.
Okay. So what is the current market share for you amongst private players right now? What is the overall market and the overall market as well? What is the trend that you're seeing here with the expansions that you're planning in states like Tamil Nadu as well?
We think that we will be maintaining a 4-5% market share in Tamil Nadu, which we want to increase it to the 6-7% as the overall market share. We have strong players in the market there, so it will be a battle that we'll keep fighting, but we will be growing at least by a percentage or two of market share in Tamil Nadu.
So that's Tamil Nadu. Generally in the industry, what is that number looking like for you?
Generally this year, because as we were saying earlier, the flushes come in earlier, there's plenty of milk in the system. We think we will be able to maintain a steady state of market shares. We won't have much of an increase, because normally when there is a huge flush, we find a lot of the unorganized sector coming in and offering product which will be cheaper. So volume growth will be a little muted compared to the earlier years, but it is a seasonal thing that happens in the dairy industry most of the time. When there's surplus, volume will get muted.
Would you be able to quantify, number one, the revenue, the margin, as well as the bottom line guidance that you can share for FY25?
So FY25, our revenue guidance will be similar as what we have seen in the first quarter, where we've been growing at the 10% in terms of the revenue growth, and the profitability growth will be in tandem, because as it's a game of once we have more milk in the system, cost of milk comes down, which will also expand our margins well, and also adding a bit of our value-added profile improving. We will maintain the same growth of that 15-20% in terms of the bottom line that we already have.
Okay, and margins at around 11.5%. Is that something that we can look at this year?
Around the numbers, around the double-digit numbers, definitely, ma'am.
Okay. Mr. Dodla, I wanted to understand your current distribution reach. What is the targeted expansion? Because you've increased your retail parlors to 598. You are talking about expansion in different states as well. What is the plan here? What kind of capex will you have to put in here?
More than the capex, we have undertaken a little more of expenditure on our branding side. We are now doing a little more of branding exercise and making our presence being availability rather than presence, saying availability to become more far-reaching. And also we have been pushing more product into the modern trade. So with all these three that we will be going into it, capex is not large on the front of marketing. It's only a bit of the freezer expenses that we factor in, or the refrigeration chain that we try to give it to the trade. And it will not be large. It will be a very small numbers of a few crores here and there, not a big number in terms of capex.
Okay, so last question from our end. How big can the Orga feed, which is the animal feed business, be as a percentage of the revenue going forward?
As a percentage of the revenue, it will still be small. We did around 80 crores. We're expecting it to almost double to become maybe 160 crores by the year end, if you look at it. Out of a gross revenue of maybe around close to 4,000, so it will hardly be 3-4% of the overall revenue.
Okay, Mr. Dodla, thank you so much for joining us today and giving us all those details. So the street liking the numbers, that's the word coming in from Dodla Dairy. We'll slip into a short break. We'll get you more on the markets and put focus on Thyrocare, which is buzzing in trade on the back of numbers. Stay tuned.